If you've built up over $5 million, you might be wondering, do I really need a financial advisor at this point? You clearly know how to manage your money. You've taken risks. You've made smart moves. You've really won more than you lost. So what can an advisor possibly do that you haven't already done? And it's really a fair question, but here's the part no one tells you. Success actually makes financial decisions more complex, not less. Because once you've won the game of accumulation, the rules change. My name is Chris McClure, and for the past 30 years, I've helped successful families and business owners figure out exactly what kind of advice, if any, actually makes sense once you've already made it. Let me show you what I've learned through the stories of real clients who came in with wealth, confidence, and questions just like you. So let's start with Dave. Dave sold his logistics company at age 58, and he walked away with $7.2 million. He was really good at spreadsheets, and he was a long-time do-it-yourself investor. But when we mapped out his next 30 years, that's when the cracks started to show. He had 6 accounts spread across 3 different categories. He had tax-deferred, taxable, and trust-owned. Plus, he had some old retirement assets that he hadn't touched since the sale. So he ran some tax projections. We factored in Social Security timing, Medicare, Roth conversion windows, and RMDs. And here's what we found. 2 simple tweaks, one with his IRA withdrawals and another with his charitable giving, saved him over $480,000 in future taxes. No new products, no secret sauce, just precision around his planning. At this level, it's not about beating the market, it's about sequencing and strategy. And the next story is Janet. And Janet had $5.8 million. She was recently retired from a large corporation, and she had a 60% stock, 40% bond portfolio. And this was created by her prior advisor. But here's the twist. She didn't need that much market risk anymore. She wasn't trying to double her money. She just wanted to enjoy it and have some fun. What she really needed was stable income. She needed less tax drag, and she needed a plan to support her grandkids down the line. So we shifted the strategy, right? We adjusted. We used municipal bonds for income inside her trust account. We used dividend-paying stocks in her brokerage account, and we held long-term growth assets inside her Roth. We also restructured her asset location. We put tax-inefficient investments like REITs and bond funds into her IRA, and long-term equities into her brokerage account, because the tax-inefficient assets don't have taxes in an IRA, and the tax-efficient assets are best used in a taxable account. And by doing this, we could harvest losses every year, even in a rising market. And so the result is she ended up with nearly $90,000 in capital loss carryforwards. That's $90,000 she could use to offset gains, unwind old positions, or even reduce her bracket in high income years. Same money, lower risk, more control. And she mentioned to me after her second meeting that her planning finally met her life. You see, that's the second big idea. It's not about outperformance, it's about alignment. Alignment with your lifestyle and your goals and your freedom. So let's talk about estate planning next. This is where things get really serious, because at this level, a simple will probably won't cut it. One couple we worked with had 2 kids. One was thriving and the other had, unfortunately, let's call it a checkered past. They didn't want to penalize him, but they also didn't want half of his inheritance ending up with an ex-wife or getting drained by creditors. We used an idea that I like to call a bloodline trust. It's the same assets, the same love. Now he's protected. No drama, no confusion, just peace of mind. Because when the stakes are high, structure matters. And the last story that I have is a story about Mark. Mark didn't come to us for performance. He came because he was tired of the noise. Every week, it felt like someone was pitching him a new deal, a new fund, a private placement, even a friend's real estate opportunity. He told me, I'm not even sure what I'm trying to do anymore. And that's where we helped the most. We clarified his goals, we built a filter, and we set guardrails for him. Now he says no faster. And he says yes only when it aligns with what he and his wife actually want. You see, that's the final piece, is objectivity. Because at this stage, everyone has an opinion. Your uncle has an opinion, your insurance person has an opinion, your estate planning person, everyone has an opinion. But very few people have your perspective. And so a good advisor doesn't push an agenda, they build clarity and confidence and control around yours. So do you need a financial advisor if you're already worth $5 million? Not for the basics, you've already earned your way there. But if you want to simplify complexity and you want to reduce risk and sharpen the way your wealth really supports your life, then yes, it might be worth a conversation. So if that resonates with you, I'd invite you to grab one of our free guides below or schedule a quick call to explore what's possible. And if you enjoyed this, I'm glad, because I really love making these videos, and I'll see you on the next one.